Good afternoon, everyone. Gabe Velazquez here with you on a Tuesday. Hope everybody has had a good holiday, kind of took some time off. So a couple things. I'm going to do a class in about 2 hours. Well, no, it's actually what, 3 hours. So if you want to join me for that, it's free. It's we're going to talk about how to distinguish between the better levels, higher probability levels. Not every level is created equal. So if you want to go ahead, hit the link below. There's still a time. I have about 50 already signed up. So, but usually I'll get, yep. Hey, Scott, how you doing? Man, it's been a while. Wow. What's been like 3 years? Okay, good. Good, Jim. Yep. Wow. Okay. Well, nice to see you. Hope you're doing well. Yep. All right. Well, great. Great to see you. Oh man, it's been a long time. Anyways, let's let's talk about the markets today. Not a lot really, since I was with you on Friday. So yeah, we are basically just coiled up here, really. And again, just talking about what I talked about on Friday, just kind of rehash, because really there's not really hasn't been a lot of change since we did have a futures market over the weekend, Sunday, and going into the stocks were closed yesterday. But in any event, yeah, we are hovering between 4,000 and 4,032 in the S&P. And part of what's going on is, just to kind of reiterate, this is the battleground, right? I've been talking about this. What do I mean by this? Well, the battleground is and I covered this I'll actually talk about this in the class today, where you've got a whole kind of confluence of, you've got that 200-day moving average. You've got if you're drawing if you're looking at a monthly chart, if you draw that downtrend line and all that kind of stuff. So that again, not that, as you know, I'm not big on conventional analysis, but the fact that a lot of people look at that, you can't entirely ignore it. And so I think that's really what's going on. Now, we do have PPI tomorrow. So I think that may be the catalyst that gets us moving out of this. I do, these type of kind of coiled up tension building, consolidation is never lasts, and we are going to break out of this in either direction. So we are positioned in TTS. We are positioned to take advantage of this tomorrow if it happens. We also short Russell. So we're kind of a neutral kind of market, in more or less anticipating a big breakout, which is the type of market we're in. So we shall see. The breakout is going to happen above 40.33. If you look at your charts, if you guys are pulling up your charts here while we're at it, we are essentially, we had a little bit of a false breakout above the high from this weekend, 40.26. We kind of went out this morning, looked like it was off to the races, and then right back down again. Part of what's going on today, if you guys are looking again under the surface, which I like to talk about, is it's really a mixed bag. It's kind of you've got Goldman dragging down the Dow, you got Goldman, Travelers, and then on the other side you've got Tesla, which had a really great day. Also, like some of the semiconductor stocks really had a good day. TSM was up nicely today. A lot of the big semis were up today. So just really kind of, again, just kind of a mixed bag under the surface. I think a lot of rotation going on between, the financials and technology. Technology actually was outperforming today. So yeah, just an interesting situation. But all in all, I think we're ready for a break. In what direction it's going to be interesting. I think the market seems very resilient to me, so I think we could get another pop to the upside. I do believe we're going to get at least test that 40. I think I mentioned this on Friday. That 41.76 kind of we'll call that the December or November PPI high. I think we probably get up there eventually. And so it's going to be again, breakout trading is really, there's not a lot to do today. It's just kind of really just coiled up, other than, again, if you're in individual stocks, which is what I've been kind of doing with we're in JPM. We do some earnings. We're going to probably do some earnings on we have SLB coming up later today, later on Friday. I think we're going to probably get into that. If you have been in TSM over the last month and a half, TSM, Taiwan Semi, that thing's done great. If you picked up some Tesla at 103, you're doing wonderful with that too. So there's, again, it's not just all about just trading the indexes. There's a lot of stuff going on under the surface. Okay. So that's one thing that if you have the versatility to be able to trade all the different asset classes, which is something I am a big a proponent of, options, stocks, futures, the whole gamut, you're going to do much better than getting locked into just one or two asset classes. And even to extend that out, we want to also get into the various, other than just the indexes. I've been talking about some of the currencies like the yen. I'm actually going to get into that in a second. So all in all, let me just recap on the indexes. Not a lot to so in a nutshell, we got 39.95 on the S&P, 40.33 to the upside. Essentially, you can call this a range, and we're likely going to get out of that tomorrow with the producer price numbers. If they come in soft, we should get at least an attempt at a rally. And the fact that again, kind of a mixed bag. As long as technology holds up, I think the market will do okay. Notice today, even with the with Goldman and some of the financials down, the market's still somewhat holding up, and you can see clearly that the Nasdaq is outperforming. It actually did hold above that 1136 level, and we are going to go probably. We got a level. We were kind of hovering around that 11,700 level that I mentioned the other day. But other than that, really, if we take off, I don't see anything on the Nasdaq futures until we get up to the 12,09375, 12,100 level. So I think we have some runway to the upside for now in that regard. And then the small caps kind of underperforming today. We are short, and you can see that seems to be holding up at that 1900 level, which is what I mentioned. It's the top, basically just the top of that massive range that we've had for now going on 2 months. And so that's part of the reason why I put that on. You can see there's a big resistance level. We've actually come up and fallen off there several times there. So if the market does decide to go the other way, I think you small caps go all the way back down to 18K, which is our target. So essentially, we're short Russell because we're also long calls in the S&P. So it's kind of a hedge off. If the market does fall off, it'll be offsetting the long calls that would probably lose value and so forth. So that's kind of the strategy I'm using at the moment. Okay. All right. So that takes care of that. Bonds also, one of the things I think that's helping the NASDAQ is the bond market. And I've been talking about the 10-year. That's really going to be important. Bond market is driving pretty much everything, including the Fed. I talked about this on Friday, where And I wrote about it over the weekend. By the way, if you don't get my newsletter, sign up for it down at the bottom there, or if you go to the website, you can also sign up for the newsletter. I write it every weekend. It's free, kind of just my thoughts and so forth. But this weekend, I wrote a little bit about the fact that and we have a bunch of Fed speakers coming up in the next couple of days, and that they've been super hawkish, telling you that the job's not done. We're going to keep raising. We're gonna basically keep raising until inflation is down to 2%, and so on and so forth. That is at odds. If you watch the question I always ask everybody, well, who do you believe? Do you believe the 2-year had this massive rally in the last couple of weeks, right? The 10-year's been rallying. The 5-year's been rallying. That is at odds with what the Fed keeps telling you and what everybody else is telling you. So who do you want to believe? Do you want to believe the Fed, or do you want to believe the bond market? What do you think? Question. Type it in. I know you guys are on delay, but what do you think? Who do you believe, the Fed or the bond market? I know where my money is. What do you think? Exactly, Scott. Yep. Fed always gets it wrong. They got it wrong last year, right? Yeah, they got it totally wrong last year. Now they're going to probably get it totally wrong this year. They're going to Yep. Yeah, right. Yeah, they got it wrong last year. What makes you think they always get it wrong? So, anyways, follow my point to you is bond market is leading everything, including stocks, by the way, right? You think about in the last month, why did stocks rally? Well, look at the bond market. Does that make sense? Put a chart side by side with stocks and bonds, and you can see why stocks have come off the bottom and refuse to go down. Now, here's the thing: if the bond market turns tail and goes right back down again, rates come back up again, then stocks are going to have a problem, right? Will they ever increase rates? What do you mean? They have increased rates. That was the big drop in bonds between last fall. Fall of 2021. Look at it 2-year. Look at a chart of the 2-year from September 2021 to the summer. That's what that's all about. But it's over. That's my whole point. The bond market was telegraphing that even back in the fall of 2021. Just look at your charts, Robert, and everybody else, right? Look at your charts. Anyways, all right. So where are we at? Let's continue. Here's the level on the 10-year. Is that you, Bob Haskell? Just I can't. I don't know who's who. All right. I'm not sure which Robert you are. Anyways. Yeah, 115.11. Okay. 115.11. Check out the charts. Yep. But again, yeah, that was in the 80s. That was 81. Yep. I was a child. So I didn't get to buy a house. Right, Scott? Yeah, yeah, that was what, 81, 80? Anyways. Yeah, that was a long time ago. All right, so in any event, yeah, look at 115. Look at your 10-year. And by the way, which is the most important of all the maturities in the bond market? right? 115.11. I'm sorry, the 10-year. 10 years is the most important to look at. Yep, 10 years always. That's the benchmark. That's the you want to look at the 10 years. So look at 115.11. You can see there's a big resistance level there. We actually last week we came up there and pulled back. Now we got to hold 113.26 though. Look at your chart. 113.26 is where we got to hold on to these bonds, or else we probably head all the way back down. Back in the middle of December, we went all the way down to 112. So it's it's very important that we watch the bond market in the next, especially tomorrow after the PPI numbers. Okay. All right. Let's get into the dollar. So moving on to the dollar. The dollar is hanging at 102. I gave you guys this level the other day. 102.19, 101.65. Daily accumulation. You can see that on your charts. Look at the Dixie. 101, 102.19, 101.65. Kind of right off that pivot there. We had a pivot 101.38. So all that, this whole area here. Now, the dollar has been, obviously topped at our distribution, monthly distribution, 114.72. It's come down pretty hard. I do believe we're probably ready for a bounce in the dollar. Okay. And so now every other currency, the euro looked like it wants to break out. It did have a nice move, but it's been just really kind of just what it does is it goes sideways for about 3 weeks. Then it has another leg up, goes sideways. So it's really not been great to trade. I have to tell you, we are coming up to some levels in the euro, by the way, that I'm looking at for our members. Look at right around 1.10110. There's some really decent levels coming up in the euro to short against. Not so much in New Zealand. New Zealand's just been range trading. So as the pound did come down off of 118, and then looks like it's heading back up to 125. But the two currencies again that I've been kind of talking about, peso is finally, look at how parabolic that thing is. If you've never traded Mexican peso, check it out. I've been talking about this for like a couple of months, and now it's gone parabolic. And I have no idea why, to be honest. Possibly, they had some treaty or something the other day. I know they were like, they had some meetings or something. I don't know. But that thing has gone parabolic up into some really, really strong distribution levels, namely around the 53 to 50, right around the 53 to 54 level. Check it out. So that is something I'm also looking at for our members. But that thing has just gone. I mean, that is a parabolic move, 90 degrees, and what that basically insinuates is that we're probably going to get a pretty good pullback in the Mexican peso, especially if the dollar does what I think it's going to do, which is probably get a good bounce. So check that out. Gold also gone parabolic. I did talk to you guys about a level. It actually hit over the weekend. It is pulling back somewhat. Remember I talked about that 1929.8, 1937.90. We're getting a little bit of a pullback on that. We'll see if that carries. We got another level at 1885 to possibly get long. I'm still wanting to get long in gold, but I'm not. I have no qualms about shorting it right around the 1950 area as well, because it's gone up pretty good. So that we actually did put on a trade this morning in silver. Basically, silver's been range kind of in a kind of consolidation, big broad range here, about 23 to 24.50. If you take a look, 24.50, 23.50 ish. This is probably setting up for a breakout as well. We are positioned for that. I did put on that trade this morning for our members, anticipating that we are going to break out of this range and go either up to 26, 27 or back down to 20. Longer term position, going out, about 2.5 months, 3 months. Okay. So that is something we are currently in at the moment. Copper, I've been talking about that. Still looking for, that's also gone parabolic around 446 as well. And very similar, you notice that was range trading and then broke out. That's the same kind of move. You remember we were 372. You can see that big kind of consolidation range. I expect the same thing out of silver. Okay, so I expect a similar move out of silver that's going to happen probably fairly soon. But we do have some levels up top, and I do also, similar to gold, maybe catch a pullback. We can get a pullback. The problem is we're not getting a lot of pullbacks these days, and so it is a bit of a challenge when you get these markets just breaking out hard, and then you don't want to chase them, and sometimes you just don't get a big enough pullback to get long. So. That's why we're utilizing some option strategies to get involved in some of these breakout trades, which allows us to, not have to take on the risk of futures and get whipsawed, that type of thing. Okay. Let's see. Oil again, quietly just grinding higher. I've been talking to you guys about how, I've been bullish on oil, and again, very similar to some of these currencies, just kind of grinding higher, pause, goes up, another leg up. Now we're sitting around the 82. So we should be able to, I think we're eventually going to break out. I may utilize USO. I may try to get long with USO with our members if we get a pullback as well. We should be able to get a pullback from 82. We'll see. It's all China, by the way. That's a China story, everybody, right? So that's going to be really interesting if we can break out above 82. I do suspect sometime this year we will be up into the 100 mark at some point. So I am still fairly bullish on oil for obvious reasons that everybody probably already understands. And now that China is opening up, they are the second largest consumer, if you will, of oil. And so, that's part of why the China story is so important for going forward on oil. Now, nat gas. We are also trying to get long nat gas. I put out a trade this morning for our members to try to get long on a pullback. There's two ways you can play this. I've been talking about oil. I've been talking about the futures. So there is a trade I have not too far away from current price. You look at a gap that was created over the weekend. That could be a nice gap fill. And also, we can also look to, on a longer term basis, I'm looking at either UNG or BOIL, which is the leveraged ETF that tracks the nat gas market. So the futures is a shorter term play. The BOIL would be a longer term play. One thing that you do need to, it's kind of been churning around this 3.5. But I think if we can break above 420 in nat gas, about 420, that would confirm a bottom. I still think that we may, the futures trade that I have out is essentially, it's as you guys know of trading oil, and we're using, nat gas, and we're using the quarter size mini contract. Just target just up to like 4. That's pretty good. But on a bigger time frame, I do think eventually we'll hit at least up until back up into the 6 MBTU type of range as well. And for that, BOIL will go from, if you pick it up at around 11, where it is right now, 10.5, 11, that thing will go to 30. That's the leveraged ETF. That's why I'm more aggressive on that, because I do believe even just a move up to 6 would be quite profitable if we can catch. Obviously, timing is everything. Okay. And then lastly, grains. Grains look like looks like the grains are also starting to look very bullish. We just broke out above 1536 on soybeans. Wheat looks like it's holding 723, and then corn also breaking out to the upside, headed to $7 a bushel. I am looking for a pullback here. Unfortunately, we missed the pullback down to about 6.5. In corn, it just kind of was churning and burning down there, and then it just kind of took off. So anyways, to recap, everybody, again, equities, probably, I would say by the end of the week, we're going to have we're going to resolve this kind of tension here. Either we're going to head right back down to 3,800, which is the bottom part of the range in the S&P, all predicated on tomorrow's PPI and again, more earnings coming out. We've got still a slew of earnings. The big one, which we're not going to play because of the volatility and the options are not really that great, would be Netflix, right? So Netflix is kind of a little bit of a bellwether. As you guys know, that's coming out on Thursday, I believe. So that'll give us a reading on the U.S. consumer and so forth. So Netflix is going to be the big one. Obviously, we had Goldman and Morgan Stanley this morning, and they were actually, again, Goldman was the big drag pretty much on the market, really. If you think about it, Goldman was the drag overall on the Dow and the S&P, so we'll see how that plays out. And we are long JPM, by the way, too. By the way, we are in a volatility spread in that as well. So, okay. So other than that, that does it. Again, if you want to join the class this afternoon, there's still time to sign up. We got it's going to be at 4 Pacific, 7 Eastern, 6 Central. I'll be talking about I'll be spending a bunch of time with charts. If you want to sign up for the class or you want to sign up for the newsletter. Also, if you want to spend 5 days with me in our morning session, kind of like the old days, go ahead and sign up for that. That's absolutely free. You just, spend 5 mornings with me of your, whatever days you want, 5 days for free, kind of get a sense of what we're doing, kind of kick the tires and that type of thing. So if you want to do that, you can also sign up below. Other than that, I think that's going to do it. So have a great rest of your week. I'll see you. I'm here. Hit the link. Are you on the YouTube right now? Go down on the bottom and actually, let me just type in support or hit have you been to my website? Yeah, just either go to the link below. It's right down in there, and then they'll link you up. They'll hook you up. My support staff will hook you up. What's your name so I know who to look for? Okay, Tess. Yeah, go ahead and hit the link below, or type in. Oh, Barbara. Oh, hi, Barbara. Okay, support at transparenttrading-solutions.com. The links are below. You'll find it. Okay. I look forward to seeing you in the session tomorrow then. Okay. All right, everybody. Have a great rest of your week. I'll see you on Friday. And I am going to start doing some Twitter, that audio thing. What do they call it? Twitter Spaces. I'm going to start probably doing that next week. So look out for that as well. Okay. All right, everybody. Have a great rest of your week, and I will see you on Friday close. Take care.